Hey there, investors. It's GrowFin channel, your guide to the wild world of Wall Street. Let's talk about the stock market today. We're seeing a strong push towards record highs. The bulls are clearly in control right now. But remember, the market is a fickle beast. We need to stay vigilant and watch for any signs of a reversal. This recent rally is being fueled by a number of factors. We've got strong corporate earnings, positive economic data, and continued low interest rates. All of these are music to the ears of investors. But don't get too comfortable, because there are still some storm clouds on the horizon. Inflation remains a concern, and the Federal Reserve is getting ready to start raising interest rates. This could put a damper on economic growth and send the market into a tailspin. That's why it's so important to stay informed and be prepared for anything. We're going to break down all the latest market moves, analyze the key economic data, and give you our take on what to expect next. So buckle up, because it's going to be a wild ride. The big question on everyone's mind is, when will the Fed raise interest rates? The answer depends on a number of factors, including inflation, employment, and economic growth. The Fed is watching these indicators very closely, and they'll make a decision based on the latest data. Investors are eagerly awaiting the release of key economic reports such as the Consumer Price Index and the Jobs Report. These reports will give us a better idea of where the economy is headed and how the Fed might react. If the data shows that inflation is still a problem, the Fed is more likely to raise rates sooner rather than later. This could lead to a sell-off in the stock market as investors anticipate slower economic growth. On the other hand, if the data is positive and inflation seems to be under control, the Fed might hold off on raising rates. This would be good news for the market, as it would signal that the economy is still strong. The bottom line is that economic data is king right now. Keep a close eye on the upcoming reports, because they could have a major impact on the market. Let's take a look at how the major U.S. stock indices are performing. The S&P 500, which tracks 500 of the largest publicly traded U.S. companies, is up significantly for the year. This broad market index is often seen as a good gauge of the overall health of the U.S. economy. The Dow Jones Industrial Average, which tracks 30 large publicly owned companies, is also up for the year. This index is often seen as a bellwether for the stock market as a whole. Meanwhile, the Nasdaq Composite, which is heavily weighted towards technology stocks, has been the star performer of the year. This index has been driven by strong earnings from tech giants like Apple, Microsoft, and Amazon. However, it's important to note that past performance is not necessarily indicative of future results. The market can turn on a dime, and what goes up can also come down. That's why it's so important to have a sound investment strategy and to diversify your portfolio. Section 4, Global Market Roundup. Asian markets diverge, India stumbles. Now let's take a look at what's happening in the global markets. Asian markets are showing mixed signals today. The Japanese Nikkei 225 index is up slightly, while the Chinese Shanghai Composite Index is down. The Indian Sensex, on the other hand, has taken a significant hit. This is due to a number of factors, including concerns about the country's economic growth and rising inflation. The global economy is interconnected, and what happens in one part of the world can have a ripple effect on other markets. That's why it's important to stay informed about global economic trends and to be aware of the potential risks. Section 5, Energy sector surges, auto industry stalls, key movers and shakers. Now let's take a closer look at some of the key movers and shakers in the market today. The energy sector is surging, driven by higher oil prices. This is good news for energy companies like ExxonMobil and Chevron, but it could lead to higher prices at the pump for consumers. The auto sector, on the other hand, is struggling. This is due to a number of factors, including supply chain disruptions, chip shortages, and rising raw material costs. These challenges are making it difficult for automakers to meet demand, which is weighing on their profits. It's important to remember that not all sectors of the market move in tandem. Some sectors are more sensitive to certain economic factors than others. That's why it's important to diversify your portfolio across different sectors to mitigate risk. Section 6. What's next for the stock market? So what's next for the stock market? That's the million-dollar question, and unfortunately there's no easy answer. The market is constantly evolving, and there are a lot of factors that could influence its direction in the coming weeks and months. We'll be keeping a close eye on all the latest economic data, corporate earnings reports, and geopolitical developments. We'll also be listening to what the experts are saying and trying to get a sense of where the market is headed. Section 7. Stay informed, stay ahead, your daily dose of market insights. That's all for today, but the market never sleeps. Make sure you stay tuned for our next update, where we'll bring you all the latest news and analysis from the world of finance. Remember, knowledge is power, and in the stock market, information is king. Don't miss out on our daily dose of market insights, expert opinions, and actionable trading advice. Subscribe to our channel and join us as we navigate the exciting and ever-changing world of Wall Street.